The game has changed, right? Because I think the reality is now, fast forward even 5 years ago compared to sort of like when you and I were both in San Francisco, where there are so many more experienced, savvy founders now that don't need accelerators. And there's so many more investors now as well too, that it's just, everything comes down to supply and demand. And so I think the really, really savvy founders are like, yeah, I don't need any accelerator. I just figure this stuff out myself. And a lot of them end up doing that.
Ladies and gentlemen, welcome to another episode of the Inevitable Podcast. I'm your host, Peter Sorrentino, VC, author, entrepreneur. It's a pleasure here today to be with my dear friend, Marvin, Liao. As you guys know, my life mission is to really help and propel founders and investors, right, just achieve greatness faster. And so I started this episode. Marvin is an investor, operator, executive coach, conference keynote speaker, holds, very strong opinions and perspectives about a bunch of different things, which is always something that I've appreciated about you. Venture capital, tech, media businesses, and so forth. Today he's a partner at GAMEGROOVE Capital and also has advised multiple different family offices. Previously, he was a partner at 500 startups. That's how we met. I think we've known each other for about 6 or 7 years. We've co-invested.
Yeah, that's right. About almost 7, 8 years. 7, 8 years probably.
7, 8 years. We met when I was doing a SendGrid, trying to sell email to all the companies there. It's a relationship and a person that I very much admire and appreciate. And before getting into venture, Marvin was a senior executive at Yahoo, back in that old guard of Yahoo that actually formed a bunch of badass people. Yourself, Paul Graham, including a bunch of others, and has been in Silicon Valley for about 21 years, right?
Yeah, I think going on 22 now, probably 22 years now, which is nuts. It's gone by so quickly.
22 years. Also, world traveler, book collector, voracious reader, and describes himself as the Asian Jason Bourne. I love that one. Aspiring to be the world's most interesting man. Marvin, thank you for joining us.
Thank you for having me. What an introduction. I hope I don't let everybody down.
Great to have you here. And I think not a lot of people know this, right? But you are also an immigrant, right? You grew up in Canada?
Mm-hmm. Well, yeah, I grew up in Canada. Folks are originally from Taiwan. They went to grad school in the U.S., was born in the U.S., but I moved to Canada when I was 1.
I see. For how long did you live in Canada before coming back?
So 21 years in Canada, and I spent about 3 years living in Asia and Europe before I moved to the U.S.
You're in Europe right now. Where are you right now?
I'm in Kiev. So GameGroove, just for folks who don't know, GameGroove is actually a holding company. It's a gaming holding company / sort of family office. So I've known these guys for a long time. So I joined their board, and I'm a partner, but I also joined their board and just kind of helping out, to be honest. I go in 1 or 2 days a week and help them with sort of operating stuff. So originally we might be doing some investments off the balance sheet, but right now we're really focusing on all the different assets that they actually have at this. They have there's 4 gaming studios. We have 2 different sort of SaaS related, gaming IP related SaaS plays, and some other sort of interesting IP. So I'm just helping them sort of manage and sort of figure out a strategy for everything that they're trying to do.
They're headquartered in LA or in Kiev, or because I think
the main office is actually in Kiev. There's fairly strong operations. I think we have 70 to 80 people. There's a studio out in Frankfurt, and we have very, very small operations in LA. But we're looking to probably expand in the next. Well, once this COVID thing is sort of it seems like it's winding down, at least in the U.S. So we're most likely looking at making a big push of expanding, or at least definitely setting up a much larger office in LA.
Speaking of the pandemic stuff, how's the pandemic in the Ukraine? Just in terms of the social fabric of the world, how people are doing stuff.
It's very interesting. The reason I came out here was because, if I'm very honest, nobody kind of cares. When they had the lockdown, it's almost like prohibition for restaurants. And so if the places that are open, you kind of you have to go through the back door. Or a lot of times, it's just really weird. I was here in February when they had the lockdown. I found 5 restaurants, and because I tip well, you just kind of knock on the door, they would let you in. It's always kind of funny. Nobody really pays attention. They pay attention, but they don't really pay attention. So most of the people I've known out here, most of them are young folks. They've all gotten COVID already, so it's kind of tore through here. But they were. I think this is one of the things with sort of ex-Soviet Union places. They're super, super skeptical about media. very, very skeptical about sort of like government mandates. It's very hard to enforce like hard like mandates here. So, life kind of goes on. So for better, for worse, the numbers aren't great here, but for better, for worse, like you definitely feel a lot more free here.
That's interesting. Yeah, I remember actually a common friend that I think I might have been the one that connected you guys. John Sung, the founder of Five9.
Yeah, sure.
Dealings, right?
Yeah, that's right. He's a friend. I know him well.
Yes, and then he has a bunch of stuff happening in the Ukraine. I mean, married a Ukrainian woman as well. And I remember him explaining to me the fact that you actually have almost two different judicial systems in the Ukraine. You have the oligarch system and the actual state. So it's interesting the way that you described. It's like, oh no, you have a bunch of stuff open. You just need to understand, where are the back doors, basically?
Yeah, you just have to know where the back doors are, and they're people with very common sense in the sense of like we can go on about sort of politics and the lockdown and stuff, but they're just a lot more commonsensical, and they're not so nutty about everything, right? Wear masks, don't wear masks, like they don't freak out about this stuff, but I think there's sort of a little bit more of a ruggedness, individual ruggedness here. I'll leave it at that.
Well, I mean, I'll be honest in terms of just with the differences between San Francisco and Miami, especially now that the CDC announced, right, that it's okay for fully vaccinated people not to wear masks anymore. It's a complicated situation for us to get back into regular common sense logic, even in the U.S., because a lot of people are still living in fear, and maybe super high fear is San Francisco. Yeah. Things that happened with me when I was there. Double mask people screaming.
Yeah. That's nuts.
Me.
That's nuts.
I've had so many weird situations that were completely, just ridiculous in San Francisco. But this weekend, I had to buy clothes, so I went to a Banana Republic store here in Miami. Everyone was wearing a mask still inside, and I was just like, and I walked into the store maskless, but I had it in my pocket. I'm like, I'm not going to be an asshole. Like if there's a situation, I just want to test. I want to see, because ultimately, if the CDC said that it's okay, why the hell
especially if you're vaxxed. Yeah, exactly. It's nuts.
Yes. I've had both of my Pfizer shots. It's fine. And I was just like, I wanted to test it out. And then that feeling about what you're talking about, that they don't really care, it's present here. But even this morning, I was in the elevator, and I'm not wearing a mask anymore. I'm carry it with my pocket. I would only wear it whenever I have to. And then people immediately, you walk into the elevator, even although they see me without a mask, the ones that are not wearing, they have this urge to justify themselves. It's like you're in this 45-second shared ride, and they're like, "Oh, I just want to let you know this. Like, I'm fully vaccinated. This is why I don't have a mask." Yeah. But I think that this is absurd. And there's an explanation, a mini rant, and then you get to your floor. Yeah. This has happened a few times already, so it's just interesting. It's going to take time for things to readapt once again, unfortunately.
Yeah, I'm with you. I mean, it's interesting. We've gone sort of like the red states are like never wear a mask. That's kind of, like during the pandemic, I found that to be very weird, versus the blue states, which like wear a mask forever, right? Like it's like, well, that's also not really the answer either. This extremism that's really taken off the U.S. as a moderate, I find is very weird. Not weird, but just maybe it's it's a weird time.
Let's go back to you. So how did you end up joining Yahoo in the first place? Because you were there for a while, right?
Yeah, so what ended up happening, just a backstory. So I moved to San Francisco in January 99, joined a PR firm, awful at it. They fired me. I was so bad they fired me on my birthday. Not joking. I was so bad at it. So I lasted about 3 months.
Oh. Were they aware that it was your birthday?
I'm not sure, but I mean, in some ways, in retrospect, turned out to be a gift, right? Because I was awful at it, and knowing my sort of stubbornness, I would have tried to stick it out for a full year at least, right? And that would have been hell. So I actually ended up applying for the startup that had at that time raised about $12 million or something, called Libris. Ended up joining them as their second marketing hire. Was amazing. So I was able to ride that for 2 years. Learned a lot, met awesome, friends from that experience. I'm getting to the answer with Yahoo is that, like everybody, got laid off in 2001, beginning of 2001. So I was out of work basically for almost 5 months, down to my last literally $500. And my boss's boss, my old boss's boss at Libris, his wife actually worked at Yahoo, a mutual friend, Jasmine Kim. He was like, hey, Jasmine's actually hiring somebody, looking for somebody. Like, why don't you apply? I can put you in touch. And so Jasmine was a VP over there running international marketing. So she hired me. The original plan was to go do that for 3 months and then go do my business, go do my MBA. Ended up spending spending 10 and a half years there, right, rising through the ranks, and had an amazing experience. So I'm very, very grateful to her and Paul, who's still continually a good friend, for getting me that role. And that really changed the trajectory of my career and my life. Because as I tell people, they're like, you don't understand sort of what Yahoo did for me. It really elevated, it put me into a realm of just like a lot of amazing, smart people. And the stock price at that time was $9 before the stock split. So, was very, very fortunate, really funded a very, very good lifestyle for me since then. Like unintentionally, I had no plans. Like it was literally one of the 4 companies I was hiring in 2001. It was Google, Yahoo, Microsoft, and eBay. Like nobody else was hiring in the Valley during that time.
Nice. I mean, I think very few people also know how there was a time where working at Yahoo was actually far better than working at Google, because the culture was so strong. They were actually shipping high quality products and innovation. It wasn't the Yahoo of like the last.
Not the Yahoo, the latter part that you know now. I mean, I just look back on those days with some sense of pride, because when a lot of times like now you're like, oh, I work at Stripe, right? Like that's an amazing place. Or I work at Coinbase. Like, it's just you're proud to work at least I think you're proud to work there. Like, that was Yahoo for me, right? You go to a party and people like in 2001, you're like, what do you do? And they're like, well, I work at Yahoo. You're like, oh, wow. Like, and you wear the t-shirts proudly. That was probably the case up until maybe 2007, 2008. Boy, and then kind of the wheels really started to fall off the company at the time. I really overstayed, but they were so good to me. They treated me very, very well. And I was very fortunate. I basically changed jobs every 2 years. And so my last 4 years, I was mainly, even though I was based in San Francisco and Sunnyvale, I was mainly running overseas business group from 2008 to 10. It was, 2007 to 8 I was in the emerging markets. So I was spending time in Eastern Europe, in all over like, Africa, Middle East, Latin America. And then the latter 2 years, I took over a big part of the EMEA region. So they gave me a lot of responsibility, just like really let me do whatever I wanted. And so it was a really good gig, and they paid very well. Like that, I was paid very well. So, I probably should have left maybe 1 or 2 years earlier, but it was an incredible experience. I worked with so many smart people that I still keep in touch with these days, who've all gone on to do amazing things all over the, like the ad tech world, the media world. One of my mentors over there actually sold his company for, I think, $1.5 billion or something, like about a year ago. So like nice. A lot of folks have gone to do really, really good things over, afterwards.
Amazing. And you had multiple different routines, right, that you had to do because of this global lifestyle. So even from like a adaptation, productivity standpoint, like how was that?
I mean, just kind of get used to it. It wasn't great on my family life. You've known me for a long time, right? When I do something, I don't do it half-assed. So you literally go all in. And so, you're on the road probably anywhere between 2 to 3 weeks every single month, because all my people were overseas, right? And all my clients were overseas. You just figure out a routine, right? Like, how to deal with jet lag. So for example, like certain things I learned for the sort of road warriors out there, especially when doing international travel, like a lot of basic things. Number one, fasting, very, very helpful, right? So never eat on the airplane, right? The other thing they do when you get on an airplane, you set your clock and you set your watch to sort of the time zone you're going to arrive in. And you sleep and do everything according to that time zone. Drink a lot of water. When you land, try to get as much sun as possible. And you have to stay up super late. Try to do the gym thing. Stay up super late till like 11 o'clock and do melatonin and do a workout, in the morning as soon as you get there. And so you just figure out these routines of just like how to adjust.
I love it. Well, your routine is exactly the one that I always use, but not so great sometimes at the fasting one. Not because it's hot, it's just sometimes for me at least, I just want to have like a drink or a glass of wine. That routine is perfection.
Yeah, you'll adjust like literally within 2 days.
I would say specifically if you do cardio, right? When it comes to the exercise, just go and sweat it out. Then shower. The melatonin. Did you know that melatonin is illegal in Brazil?
Oh, I didn't know. You should import it, man. That stuff works.
It's amazing. No, it is amazing, but it is illegal. Yeah. Anyway.
Crazy.
And then after, you went straight from Yahoo to 500, right?
No. I was very, very lucky. I done pretty all right at Yahoo, so I decided to take some time off. So I joke about sort of being the Asian Jason Bourne, but that was literally what I did must have been in 2012. So I went to about like 54 different conferences. Just to relearn. I took like Russian language class. I took several pistol shooting classes, like archery, fencing, sailing.
Oh, wow.
I did a bartending class. Yeah, I did Russian for 4 months, like a Russian language class. I forgot most of it already, but I took a Russian language class for about 4 months, just sort of completely rewire the brain. So it's a great experience. I did like lots of super, super fun things, that all the stuff I wanted to do that I couldn't do for a while. Yeah, I did sailing. What else did I do?
That's
I did
crazy.
yeah, I did a lot of random things. People are like, "What are you doing?" My parents were like, "What?" Like you're taking time out to do what? We traveled with my family during that time, and then probably must have been about September, October of that year. So this was 2012. Like one of my good friends from Yahoo actually joined 500, a guy named George Kellerman. He became a managing partner over there. I ran into them actually, ironically, in Singapore, and this must have been June. And he's like, "Hey, come meet my boss," a guy named Dave. So I met Dave, hung out with him in Singapore. I'm like, "Hey, these are cool guys. Like, pretty cool guys for VCs," because my experience of venture capitalists prior to that time was not very positive. Like, arrogant, usually like sort of like old money type, and not nice people. Generally speaking, not nice people. And so I was like, wow, they seem like really different, interesting guys, and very international. And so I did the Geeks on the Plane, must have been September, October of that year. Got to know them super well, just became a mentor at 500. And then the next year I was spending close to 10, 15 hours a week just mentoring at 500, as well as mentoring at probably about another like dozen or two other startup accelerators across the globe, because I was bored, right? You kind of started to get bored. And so I think they kind of felt guilty. So in beginning of 2014, they asked me to join as a partner and help them start their San Francisco office, and that kind of kicked off my career over there. So I was there from 2014 to end of 2019. So yeah, that's how I got into 500. So very random story, no real plan, but it kind of worked out, and I'm very, very grateful to them for letting me join. Somebody who hadn't really done a lot of investing. I'd maybe done like 8 angel deals that were all kind of disastrous. But overall, I can't believe they let me join. What a privilege.
That's awesome. No, I mean, and you did phenomenal work there. It was always great. I always enjoyed seeing you speak to the batches when we were there to do talks and mentor hours and so forth. Like your style is a good one, and it's not just my opinion. It's what I've heard from many of the founders that we've co-invested in the past. I think maybe we've done between Funders Club and One VC, and now maybe 8 deals together or something like that.
Yeah, possibly. Yeah, could very well be. Could very well be. It's probably. I know it's over 5. I know it's definitely over 5 for sure.
Yes, but I see here during that time in 6 years there were 414 pre-seed investments.
Yeah, pre-seed and seed. Yeah, it's nuts.
How do you mentally take? What's your view on this whole model of the Accelerator as an investment vehicle? Because for me, in terms of how I think about portfolio construction, it's just right. It's different than that model, and certainly both work. But
yeah, both work. I wouldn't do it again. If I was to do a fund again, it would not be this sort of like large portfolios. I think. Okay, so a couple of things about the Accelerator. I think the Accelerator as a model, I think it's done. Right? Like, I think it's really had its time in the sun. It's just, it doesn't make sense anymore. I think if you're going to do sort of the spray and pray mass stuff, Accelerator is a good vehicle for that. But I actually don't really believe in the model anymore. I actually think if you're going to do VC, it actually has to be a concentrated portfolio, because this is what I learned at 500. It's impossible to properly manage a portfolio that big, right? Like, if you really want to add value to the portfolio, it's impossible to add value. This is why I'm very, very skeptical of most VC funds now in general that are the spray and pray model, right? When I ask them like how many deals you have, even to some extent, like a lot of these syndicate deals where like I feel like almost everything's a syndicate deal now, where like there's literally like 75 folks on the cap table. So there's nobody leading these deals. And so that's fine if everything's going well, but you and I know in startups, very rarely do things go well. So in theory, you have a lot of people on the table to help you, but then you also have nobody that's willing to step up when things get really ugly, right? I was very privileged and very, very lucky to do what I did at 500. But if I was to do it again, I don't think I'd be doing a portfolio that big, right? I would be doing a much more concentrated portfolio. It's a great way to learn how to do investing. But for me to do it now, I wouldn't do it that way anymore.
Yeah, I mean, I fundamentally agree with everything you're saying, primarily because with One VC, the portfolio was always concentrated for the time I was there, and then now with Atman, it continues to be the same. And it's more of a time management situation
Correct.
as well. It's far harder to provide great results, but it gets to a point where there just aren't enough hours in the day for you to be a super helpful person. And I find that
Exactly.
it's somewhat of a disservice just to say, oh, let me know how can I help, right? Like that whole thing, which is, no, you got to be proactive, but that takes, it's a whole different game. That said, though, I've given a lot of thought into this question, and when you think about what Y Combinator has done, and which was like, we are scaling this and we will continue to bring more and more companies. The only reason why I think that can be possible is when you have a very good brand that they've worked for over a decade, and that's also the case with 500, meaning there's an ethos, right? There is a modus operandi and certain values and hidden and explicit rules about how that entire community kind of plays the game, meaning because of that, as long as you have a decentralized, leadership of about 20 to 30 very active leaders, maybe you can do it at scale, because in their minds, people have this idea of what it means to be a part of that community. And that can apply also to potentially to 500. So like today, like you said, I don't think it's if you were to start an accelerator, it seems like a crazy idea. But if you have enough brand equity, maybe it's possible, because there's something that brand stands for. I don't know if that argumentation makes sense.
Yeah, I'm with you on that one. I mean, look, I think it's totally possible. It's a lot harder to do, right? I think the more you scale up, which is more portfolio companies, you need some software, you need to make sure the community is very, very strong, and you need to make sure you don't dilute the brand. I just think like almost all these programs, like all these programs, right? I don't wish anybody ill, but like all these programs, just my observation, they've all scaled it in very different ways, and they've diluted their brands. Even YC, right? I think they've done a great job, but I think they've diluted their brand.
Well, I mean, for me, at least when it comes time, having been at Funders Club, where we see that some of the best companies out there, there is a Coinbase, Rappi, GitLab, and so forth. This is back in Funders Club. I wasn't there when it happened, but
I'd say 2012 to 2016. 2012 to 2016.
Exactly. Yeah, and I think that when you look at like tackling a Y Combinator batch as an investor at that time, it seemed like a manageable situation. You could actually have a scenario where if you had the right connections, you could meet up with every company, and maybe there wasn't that much competition on both sides. I think today it requires even more independent thinking, which is something so rare. Because a lot of people say, oh, who else is investing? And they have this herd idiotic mentality of like, oh, if so-and-so is investing, I'm going to put money in. Like, did you know that these firms also make mistakes? Sure, their batting average might be higher, but still. And then the prices get inflated. And I am starting to see, although I must admit that this is a minority trend, but founders that are a little older and more experienced are making a decision not to participate in these programs just because the deal itself is a bad deal. It's a massive dilution, and access to capital is just getting easier and easier. I mean, they do a remarkable job with the demo day, just in terms of building optionality for the founders. But there has been that dilution for sure, like you said.
Yeah, I mean, the game has changed, right? Because I think the reality is now, fast forward even 5 years ago compared to sort of like when you and I were both in San Francisco, where there are so many more experienced, savvy founders now that don't need accelerators. And there's so many more investors now as well too, that it's just, everything comes down to supply and demand. And so I think the really, really savvy founders are like, yeah, I don't need any accelerator. I just figure this stuff out myself. And a lot of them end up doing that. Or a lot of times they've been successful before. So you're seeing a lot of second-time, third-time founders really, really coming to the fore now.
So with the 414 basically investments, a lot of what we talk about in our business, which is true, goes to pattern recognition, which is certainly a problem as well. That's why sometimes you have the diversity conflicts, right? Because ultimately you end up seeing patterns and they get diluted into other things that are not necessarily associated with patterns, such as education or race, which are not necessarily inputs for massive success. So in your opinion, what is it that makes, these founders extremely successful based on everything you've seen with the accelerators, both during the batches and then after, when they go out into the world, and you can then connect the dots looking back and saying, oh, I remember of course, that guy now just raised this massive Series B, or that girl and so forth.
I think a big part of it is just like their ability to sort of like to learn, right? Just like they're learning machines. I think that's a big thing, and they aren't easily led by folks where like they'll talk to a bunch of different people, but they'll make their own decisions. So they're independent minded, but they learn. They'll look at getting as many different opinions as possible, but they'll still make the hard decisions. I want to stress, like, they are decisive. They make hard decisions, right? The minute something's going wrong, they fix it right away. And I would say just in general, just the fact that, combine these two things with just people who are just like relentless, right? Like they're just going to make this thing happen. And, there's an energy. It's not a charisma, but it's an energy because, a lot of these folks are also introverts too. But, we've done some co-investing. What is the thing for all the deals that we've co-invested in? The founders, most founders are smart, but they're just relentless, right? They make a mistake, yes. They fix it.
Yes, well, we've done what? Aircall, Big Finite, Shippo, Rapid API, IDWall. So there's 5 here, and then
that wasn't mine. IDWall wasn't mine. Yeah, IDWall wasn't mine, but that I don't think I wasn't. That wasn't one of mine.
So I was thinking in terms of 500, but sure, but you're just thinking about you specifically.
But all the other ones are all mine, right? All the other ones are all deals that I've done.
But if I had to, like, and there, Laura from Shippo is very different, and Olivier from Aircall that's different than Edo, because they're all from different countries and very different age groups.
Yeah. But relentless. They're all relentless.
All of them, exactly. I have a feeling that if you come home, like you go to their house, I don't know, you kill their families, you destroy their life, they will continue to be there, fucking building, putting brick by brick.
They're relentless.
They're just relentless. No, they don't give up. That's great. All these things, by the way, are in this framework of what we're building in terms of what is an inevitable founder. So, like what you said, basically, independent thinking, learn how to learn, be decisive, don't give up.
Yeah, like universally. And if I look at like other founders of mine that have, other founders who actually let me invest in them, like Matt from Imbroker, like totally fits that, right? Like he's amazing founder. And just like guys like that, and you see that with all the best founders in general, it's relentless.
And then what was the decision on leaving 500 and then, getting into GameGroove? And I know that you've had a few 3 months or so where you went into monk mode. So it'd be interesting just to learn more about your most recent transition.
Yeah, I mean, 2020 sucked, right? So I left 500 end of 2019. Honestly, like differences of opinions of where the firm's going. I wish them all well. I'm a stakeholder. I still get carry and stuff. But like, I don't know if they were super happy with sort of my methods of dealing with startups, my very direct methods of being brutal to startups. They were never super comfortable with that. And there were a lot of changes of management team and stuff in general. So I think for both sides, frankly speaking, I think it was mutually win-win situation. And 6 years also was a long time, to be frank, after the brutality of sort of like 2017, of getting through 2017, 2018 was hard. Like those are hard years.
It's funny that a lot of the work in venture and in investing, there's that craftsmanship where, style is a big part of the profession because, ultimately business is personal, and whoever says it's not, they're most likely either going to fuck you or trying to fuck you. Like that's basically my. I think
that's probably a fair assessment. I just think this idea of just like my take is, somebody wrote this, whether you like Professor Galloway or not, he wrote this article about divorces, right? So he's talking about like how, Yahoo was just unloaded by Verizon, but he talks about like personal divorce and other things where, it's seen as sort of this negative thing, and in many ways in society it's seen as a negative thing. But I'm like, yeah, but whether it's sort of like mergers and acquisitions, where like if it wasn't working, is it better to keep them? You're better spinning them off, right? And the same thing of just like whether it's business partnerships, whether it's romantic partnerships, like if it's not working, like there's a lot of this idea of like, we're not happy, but we got to stay together for the kids. I don't know if that's a good thing, right? Like, I don't know if that's a good thing, where it's like sometimes it's actually better to sort of like, okay, maybe we don't belong together either as business partners, as romantic partners or whatever, that so we can move on with our lives. That may not be a bad thing. And I think sometimes that should be celebrated, not necessarily like, oh, it's so bad, right? Like, and I mean this on many, many fronts.
And once you left, you said you had to go on monk mode for 3 months. What is monk mode to you?
Oh yeah. So
and what was
I
that?
can talk about it where just like I've gone through it now, so everything's fine now. Knock on wood, right? But so last year, this is 2020. The plan was do the conference circuit. I put aside a bunch of money. It was fine, right? Everything seemed like the world was great. And I started doing the conference circuit in January, February, went to a bunch of places like Georgia, Estonia, Latvia, did talks and stuff. And then COVID hit, right? So basically I landed March 1st, took my family into, basically we stocked up on food and everything already. I'm a known prepper. We started stocking up in January, but as soon as I got off the airplane, it was February 28th, March 1st, took my daughter to school. We just basically, just hit out. And of course the lockdown started happening officially March 17th. And so during that time, I was very fortunate to have invested in a bunch of real estate, not in California, but in Texas. And what ended up happening was just, there was a anti-eviction notice. So what happened was a lot of my tenants stopped paying. And so I got hammered. I got hit really, really badly, with like cash flow issues, right? Because you have to pay the mortgage. The bank doesn't care. So fuck the banks, by the way, right? Like that pissed me off. And fuck Mayor Adler in Austin for these rules, because it hurt like I said, like normal people. And so I was hurting financially, just like drained my, like I had to borrow money from my folks, basically drained the savings that I was going to be using for that year, right? And any angel investing I had. So that bled me. Yeah, so I sent my family to Taiwan in July and basically went to monk mode. Right, like turned off the heating, turned off the literally took any consulting project, anything to make money, right? Cut my burn rate to almost like nothing, and just basically fought my way out. Sold one of the properties, and that took between sort of taking any small projects and things, cutting the burn rate, selling the property, that got me out. So basically, I came out of it in October, but that was almost 3-4 months of hell. And I knew what I had to do, right? Looking back in retrospect, it's just I knew what I had to do. It just pride goes out the windows. You just take whatever, right? And you do it. You go out and you just crank and you do a good job. And yeah, so I was very lucky, but I also fought my way out of it. And boy, just one of those things of that's what I call monk mode, right? Just purely concentrating, 7:30 to 10 at night, just grinding. And sometimes you have to do it. And looking back in retrospect, it's wow, that definitely made me way stronger. I don't want to do that again. If I had to do it again, I could do it again. But boy, I'm not doing that again. And so I had a whole bunch of really good liquidity stuff that happened end of last year. So it was good, thankfully. But boy, I'm mentally much better prepared going forward because of just, I think if I'm honest, I kind of got complacent. Prior to 2020, I was getting pretty complacent on stuff of how I manage my money, just a lot of stuff. And what I learned, I think good financial advice is doesn't matter what your net worth is. What matters is actually liquidity, and what matters is your cash flow.
It's cash flow, liquidity, and then and the last one I would say is diversification as well, at least in terms of wealth preservation. I would say the wealth creation is the opposite. You want almost zero diversification, right? And good ownership. And once you've made some money, then you diversify whatever you've made. At least, I don't know if that makes sense to you, but that's how I see in terms of wealth. Building wealth is basically you don't diversify, you go all in on a few different things with a lot of focus. When those things return, then you diversify whatever you earned on that.
Yeah, exactly. I mean, for me, the big lesson was just financially, when I look at my life, I'm I don't think I did a ton of stuff wrong, but I think what the mistake that I made, and I think the mistake that a lot of people make in general, is just sort of like I said, mistaking. If you have high net worth, that's fine, but is your high net worth liquid? If you're liquid, it doesn't help you, right? In the long run, it's good. In the short run, with these crunches, as I learned the hard way, just boy, that is painful because there's, if you're liquid, very, very hard to, cash flows is what gets you out.
Yes. And there's that whole thing, you've seen that meme, right? Hard times build good people and, good times build soft. And I think we're at this massive polarization of folks that I would put us in that same camp of relentlessness and resilience, and basically, hopefully we'll take a few punches as possible, but, we can be punched in the face and we'll still be up and running, building. What do you think, though, that the type of founder that will breed after this pandemic, or at least even in terms of the transformations that you've seen during the pandemic?
I mean, I'm very concerned in some ways. Like I'm very optimistic in the long run. I'm very concerned in the short run of just when I think about sort of, we can debate all we want about lockdowns. I'm not going to do that, but just especially in California, the particular blue states, right? And I'm a Democrat for the record, but just particularly these blue states of these lockdowns and the fact that a lot of these kids have not gone to school for a very, very long time. Yeah. I think the mental health issues coming out of the pandemic, I think are going to be very, very severe across the globe. And so that is concern. Having said that, I also think sort of a lot of folks who've had it good for a long time, kids, adults, I hope they draw the right lessons from this, where it's like, okay, that was a tough time, but we got through it. How do I build some more resilience in my life, right? And how do I start valuing the things that are actually really, really important, whether it's like family, health, but also work on stuff that's actually really, really, really meaningful. And I don't mean sort of like this kumbaya, go join go like run an orphanage somewhere. But the idea of just like, I think you're going to see a lot of people, this is going to be great for entrepreneurship, because I think you see a lot of people working at these like very, very big companies, and they're realizing like, holy crap, this year really taught me what is really important, and I'm working on a bunch of stuff I really don't care about. So I'm either going to go join a company that is much closer to the mission of what I believe in, or I'm going to go start a company. And I've seen a lot of people leave like the Facebooks and Googles or whatever in the last year to go start working on stuff or start thinking about working on new stuff. So I think overall this is going to be a great thing for entrepreneurship. And I do think this will toughen people up in some ways. Unfortunately, this is awful, right? Like what happened last year was awful, but it's toughened a lot of people up where they've had this unrelenting rise, this punch in the stomach. As long as you can recover from it, usually are good things in the long run. You know what I mean?
Absolutely. I mean, I think that you learn way more from suffering, sacrifice, and failure than from when you actually get things right. I think that success doesn't really provide you that many important life lessons, unfortunately.
I also think it's dangerous, right? Like, I think Bill Gates said this, is just like success is a very poor teacher. And I think it's a very poor teacher, especially if you have gotten success very young. You start thinking you're much smarter than you really are, and you think you're smarter than everybody else. And the world has a way to sort of like really educate. That's actually what happened to me in 2000. I was my startup was on the rise. We were doing, I would have had a chance to do very, very well over there. So arrogant and so insufferable. And 2001 happened, right? Like getting booted out and, like literally laid off and realizing I'm not the hot shit that I thought I was. That really was a wake-up call of just like, wow, yeah, really not as sharp as I thought I was, and really sort of like, I said, knocked the little bit of humility into me, and that was good for me. And I've really taken those lessons, since then.
It's important, and I would say that it's interesting. I was trying to think about a theory on like when is it that, because I was in half of the time, less than half of the time that you've been in Silicon Valley, but for me we're 9 years there. So it's like, when was the moment where things started changing, right? Because taxes were worse. I didn't move because of taxes. Dating always kind of sucked as a Brazilian man. That's also. But I prefer to live there because it was better for career, more interesting people. So like none of these things were like enough of a forcing function. But the day that I believe that it was the beginning of the end of that era was when people started throwing rocks at the Google bus. This was 6 years ago.
Yeah, that must have been 2015, 2016, I think. Is that right? 2015, 2016?
That's right. And then I think it was 2015. And then I read this from another friend of ours, Zach Coelius. He tweeted that. Yeah. And I was like, oh, yeah, he's right. To his credit, I was like, well, that's when it actually started changing. And then what you're talking about in terms of when success doesn't really teach you it doesn't teach you how to be a better person. And when you have success really early, or at least what our societal domestication believes that equals success, then I think you can produce like a pretty poor outcome in terms of human behavior. And what do I mean by that? I mean all the middle managers that I have met at like parties at my house or at business meetings and so forth that work at Google, Facebook, Twitter, and blah, 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 and all these companies, and they're making a ridiculous amount of money. What their work isn't really that transformational, but they think that they are the shit. But they work at the heart of capitalism and vote for Bernie Sanders. It's this massive
crazy
dystopia.
Yeah, it's crazy. It's nutty to me. My ex Soviet Union, like people who grew up in like for some, they're like, what the hell is going on in the U.S., right? Like our parents spent their lifetime, and we spent our time trying to get the hell out to come to the U.S. as opposed to the bastion of capitalism, and now you guys are trying to go the other direction, right? And I think it's just this privilege. I think legitimate. I'm not one of the like white privilege kind of BS garbage stuff, right? But it's this idea just when you've just had so much, right? I'm not saying they don't work hard, but just like this, when you just are given so much, you've fought and you've gotten so much. I don't know. I think it does kind of mess you up, right? I definitely think like, boy, that boom went on for a long time, right? You think about that boom went from like 2010 through to 2020. That's like a 9-year boom. And I would even argue last year, with the exception of like March, April, May, like it came back screaming, at least from a startup perspective, of startup VC perspective. Like last year was crazy from like June, July onwards of just the velocity deal flow, the amount of value, how much valuations went up, the amount of money that came in. Like that was crazy. That was nuttier than it was in 2019. I thought it was nutty in 2018, 2019. I think on a sort of like a macro and micro level, by 2019, that was pretty much burned out already, right? Burned out by really sort of like the high levels of arrogance in Silicon Valley, like everywhere, right? Like everywhere. I'm talking about like from VCs, from middle management, from big tech companies, from startup founders, like just high levels of arrogance everywhere, right? The sort of like not very many mission-oriented founders. Just everybody was just chasing the money. It felt like in 2019. Then of course with the changes at the firm, like all these things, and then just me being just exhausted. I think I was just burned out by end of 2019. I really look back like now having sort of a full year, right, to sort of like process everything. I think I was just pretty much burned out by then.
I feel the same way, and also being honest, right? I was also part of that arrogance. I think that leaving my previous firm, traveling a little bit, I've done 9 investments since October, but with a completely different framework, and reflecting upon what's important in life, it makes you more humble. It is important to really think about that type of stuff. The positive aspect of this like evolutionary planet, what's happening now on Earth, is that we were all forced to really spend more time with the big decisions that we've made in our lives, and with ourselves as well. So folks that don't have a family, they got to spend a lot of time by themselves, and that you could meditate, contemplate, go deep, and really think about existential things, or you can just go crazy and depressed and be very anxious. So and the same things, like you end up spending way more time with your family, and then you think about all these divorces, right? Like the COVID divorces.
Yeah. Oh my God, so many of them.
Right.
So many of them.
It's interesting. We are in the beginning of this entire new era, and we'll see if the macro, from an economical standpoint, will allow us to then have the roaring 20s, or if we're going to have some sort of crash in 6 months or so, and then have it TBD.
Yeah, I mean, I'm personally very bullish for the next like 2 to 3 years. I just think you just look at monetary policy. I don't agree with the monetary policy, but just like they're printing, right? It's like brr, like the printing presses. I'm fairly bullish because I think there's some massive structural changes that have happened. Then on top of that, with like sort of the wave of the new business growth, like 2020 over 2019, massive new business registrations. So I'm quite bullish because I do think between monetary stuff, I think between just a lot of super smart people now really focusing on like big problems. Like, do you know how many entrepreneurs have actually gone into like biotech? How many entrepreneurs have gone into like climate tech? Like a lot of really interesting areas, right, that need sort of like real work. I'm very, very optimistic in general. I feel like I've always, maybe been in Silicon Valley too long. I'm not saying we don't have a lot of problems, but I'm very, very optimistic. Of just like, given a little bit of time, I think we can figure out a lot of the big problems facing, whether it's like income inequality, whether it's things like, climate change. There's a lot of smart people working on it. Not to say we should be complacent. Like we have a lot more work to do here. But it gives me hope that there's smart people. Anytime there's a lot of young, smart people working on something, or there's a lot of young, smart people in a country, right? So, for example, like I happen to be in Ukraine right now. I'm super optimistic about this country. I've met so many young, smart, optimistic people. That gives me hope, right? And that's very, very different. I feel like in the U.S., I don't know if we have that many young, smart, optimistic people. We have a lot of young, smart people, but I think in some ways they've taken the wrong lesson. We've had it too good for too long. I don't know. I have a lot of thoughts about sort of this stuff, but I worry a lot about what's happening in the Western European world, in the US world, the US, Canada, Western Europe, where in some cases if you see young people in most of the other developing countries, they tend to be much more optimistic about the future.
Yeah. I would say that we still continue to have a lot of pockets of transformational ambition in the Western Judeo-Christian world, I guess, if you may. But the average American today is anxious, depressed, and overweight. And the reason why is probably because modern life is just so easy. And then you have all these other people, what they're trying to do, they're trying to fast and eat like a paleo person, or it's a paradox that is fascinating just to observe, and we are a part of it as well.
Yeah, I mean, we both live in the U.S., right? My home's still in San Francisco, and just an observation I had, and I say this as somebody who's I'm American, but I grew up in Canada and now living in the U.S. Spending almost equal amounts of time sort of in both the U.S. and Canada. My view is just like life in Canada much better than in the U.S. But the difference in U.S. is that U.S. is a first world country and a third world country in the same place. I actually legitimately mean that because this broad income inequality. I actually think in the U.S. it's a feature. It's not a bug. I'll say this is because if you think you want to be an entrepreneur, whether it's in Hollywood, whether it's in tech, in any business, in marketing, any fashion, the U.S. still pulls a lot of this talent. This is a place you go to compete. You don't go there for a great life. You go there to compete, to make money. That's a decision I made. I had the decision to stay in Canada, have a pretty good life. Middle class life is nice. I would argue a lot of the folks I grew up with in Canada have a way better life in certain ways than I do. Right? But for me, that wasn't what I was satisfied with. I don't want like a normal, okay life. I want a great life, right? But that means you have to sort of like pay the price for that. That means working 80 to 100-hour work weeks. That means dealing with the third world healthcare thing, dealing with like crap, sort of like diets and just like, they're just the things that surround you with crime. Right? Like it's a real thing in the US that's less of an issue, I would argue, in Canada. But it's just like, well, you take the good with the bad, right? There's also just a lot more opportunity in the US in general, still.
I love that framework. I think it's precisely what brought me to America as well. And it's the whole how to get rich Naval thing, 100%, in terms of like that immigrant mentality, because, which, I certainly think he took it from Charlie Munger, where he talks about freedom overall. And then capital is just a way for you to just have the ability to set your own schedule and play the games with whom you want to play with, who you want to play games with. So the U.S. is the only country where my story would have been possible. I think same true. Like, I mean, where else could we have gone and become like if I wanted to nowhere else, right? So this is what makes this country incredible. But in my opinion, the U.S. is only awesome if you want to be an entrepreneur. I'm not sure if I want to have a here.
No way. Right? Brutal. It's
no
a brutal place.
It's terrible. One thing that I've always appreciated about the U.S. is the social mobility. You do have this inequality, but if there's a country with a system that would reward you for competence and ability to output something unique that others are interested in, is the U.S. I don't think that there's still like not a single.
I would say if you're Chinese, I think China is one of those places. I think that's it. I'm not sure there's a lot of other places.
Yes, but if you are Chinese, yes.
Yeah, if you're Chinese, I don't necessarily think anybody else can do that. I think if you're Chinese.
Yeah, I thought about moving to China when I was like leaving San Francisco for 5 minutes, because I realized that if for whatever reason I do something incorrect there, or I say something on the record that I'm not supposed to say, they will disappear with me, and then I'm not interested in that, Like, and no one is going to fucking come to like rescue me, and even if they do, they'll maybe just find my body. So
China's a different beast, right? Like, I think in some ways it's actually way more capitalist than the U.S., but very different rules. And the question that I think everyone needs to ask yourself is like, where's your edge? And I'm like, if I was to go to China, like, I have zero edge, right? Like, I have zero edge. My Chinese is okay. I can't read. Yeah, I just couldn't. U.S. was the only place for me. I look back on it. Even if I was to move to U.S. 5 years ago, 10 years ago, even if I was a 22-year-old now, growing up in Canada, I would still go to the U.S. There's no question. There's nowhere else. There's nowhere else, in my opinion.
Well, that's why I ended up coming to Miami, because it was the only city that would fit everything I was looking for within the United States.
Yeah.
Because I wasn't interested in leaving the country. Just to start wrapping up, the last question I'd have is, you mentioned that you think Silicon Valley will start looking more and more like Wall Street. And I mean, there's just so much that we can talk about there, specifically when we look at the fact that public equity returns when you buy things at the IPO have been significantly diminished in the last 5 years. And then most of the returns are now built in private equity investing, which includes venture capital, as long as you have the correct access to some deals. So then in the last 6 years or so, maybe, right? Like we started having D1, Tiger, Cochu, and like all these other firms, Altimeter.
Yeah, Altimeter. Altimeter is crushing it. Oh my God, they're crushing it.
They're basically saying, oh, you mean all we have to do is just grab, all the hundreds of billions of dollars that we have and continue to just work harder than 80% of all these lazy VCs? No problem. And then, and by the way, let me just go and see all these people that are being treated unfairly at all these other VC firms that should be partners and are not partners. I'm just going to fucking hire them, make them partners.
Yeah, that's exactly what's happened.
So it's fascinating. I have so much admiration for them. But then, what's your view on what will happen?
Like here's what I was seeing in 2018, 2019. I'd met a bunch of young founders where like their plan was like, come to San Francisco, crazy expensive, but this is where the money is. This is where the network is. Going to come here for 1 or 2 years. Then I'm going to take my company remote. That was already happening in 2018, 2019. I was already talking to a lot of founders like that. I think you're going to see a lot of that, right? I'm going to come to SF, build my network, meet the folks, raise my seed, raise my A, whatever. Then we're basically just going to take this company multi-hub remote. And like I said, 2020 sped this up. So, I do think like you're just going to see this happening on a regular basis in a much more condensed form than it was before. And I think that's natural. That's probably a good thing. So I think, like I said, SF is going to become like Wall Street, right? This is where you come get your money, hang out for a bit, but then you go back somewhere else, right? Or you leave to go somewhere else. And I don't think that's a bad thing. Because, SF has always been, what are 49ers, right? The 49ers were miners who came, to try to make their money, and a lot of them left. And so this is a gold rush town. That's the way SF has always been and probably will always be. And that's not necessarily a bad thing. We just have to accept it and be okay with it. Great.
You have this word on your Twitter bio, tsundoku, which is basically just a person that owns a lot of unread literature.
Yeah, it's a Japanese term. So it's a person that has more books than they can read.
Yeah. Okay. Do you have this habit? I have this terrible
habit.
It's
so bad, man. It is. I have 3. I'm not joking. I have 3 storage spaces of books. It's so bad. Like not including like my Kindle stuff and stuff at home. Like it's really bad.
I'm a voracious reader, and I have maybe 30% of the books I have right now in my bookshelf. Like I haven't read it yet, and then I would say that every 6 weeks or so I'm buying something new, so it kind of like it never fixes itself as a problem. But what really helped me with this book problem was the Marie Kondo thing. You familiar with this woman?
Yeah.
So
it's just like
it is a weird thing, but it kind of works. You put them all on the floor, and does it give you joy or not? And then you get rid of the ones that don't. It's kind of interesting.
The thing that I did, I took this from Naval, was like when I read something, the minute I stop getting interested, I just put it down. That's why I'm in the middle of like 20 books. And so I'm always reading. That's one of the things. I'm just like always reading something, even though you don't have that continuity. But I'm just like, there's some books that I read and I'm like, not into it. I actually might come back to it 6 months later on and be like really into it and finish it off. And so I find myself like in these spurts of like, there's some, like some month I'll finish like 15 books. And then another month I'll finish like nothing. Right, because I've read like so many different books, like pieces of so many different books, and that's sort of how I've been able to build my sort of like reading habit of just like I'm just always reading. I may not finish it, and I don't feel compelled to finish a book.
Wonderful, Marvin. I just really appreciate your time today. Thank you so much.
I hope this was interesting or even remotely helpful for folks. I'm not sure it was, but
I think it certainly was, because it was just you're a highly opinionated person. I'm confident that all of our listeners will very much appreciate this. So if people want to get in touch with you or at least stay in touch with you, where do they go? How can they find you?
Twitter. I'm not a big Twitter guy. I still tweet stuff, but I also have I have a newsletter, so it's like hardfork.substack.com. So I post stuff like usually 3 times a week,
which is great.
and
I am a subscriber, and I always learn.
No, thank you. By the way, thank you. I love all my subscribers. It's a free newsletter because I'm not going to make money out. I don't want to make money off stuff like this. It's a service to people, and it's also it's therapy.
Yes. No, I mean, I love the link collections that you put together. It's more joyful because I know you in person, but it's still very helpful even if you don't. Oh, that's great. Well, so, for those watching on YouTube, the podcast, right, is available on all major platforms: Spotify, Apple Podcasts, Google Podcasts, and I think 8 others at this point, because we have such a great producer with, Matt really helping us out with a bunch of different things. Make sure you subscribe to the channel, leave us some feedback. Very curious to learn more about what you've learned from this episode, right? So if you have comments, tag me, tag Marvin, and we will see you in the next episode. Thanks for coming,
Thanks
Marvin.
for having me. Thanks for having me. It's fun.